All right. Today's SPY was down 0.78%, and we're starting to get the pullback from the danger zone immediately after we filled that gap at 438. So you can clearly see how this supply zone is going to come into play now, because as we start to pull back, we need to look for gap fills below at 430, 423, and a gap down here at 418. And then, of course, in the bearish scenario, we go all the way down to fill gaps at 407 and possibly even 396 because we have this lower high with absolutely no pullback to a higher low. So if you want to get bullish and you want to have a high probability to be correct, you need to wait for some kind of higher low, higher high breakout. And that is going to tell us we're reversing out of the downtrend. So I'm trying to warn you, this is still a downtrend until we get a higher low into a higher high. So you're much better off if you just be cautious and you look for opportunities to short at resistance until we get a higher low. And yes, we do have a lot of gaps to fill to the downside. So if you want to get bullish, I suggest you wait for something like what I've drawn here. And that means we need significantly more downside to put in a higher low before we bounce. Now, don't get me wrong. It's possible we do continue to bounce and hit resistance and then still play out this higher low, higher high. I'm not telling you exactly how it's going to look because obviously we need to follow the price action to figure out how to trade it. But what I'm trying to tell you is if you want to get bullish, we need some kind of higher low into a higher high to tell us that the structure is bullish, because currently we have bearish structure of lower highs and lower lows. So again, this is the danger zone where the sellers are going to show up. And I think today was a good reminder that that is the case. So just be cautious of downside. And we're looking for critical support right around 430, 423, 420, and the gap fill at 418. If any of those levels can hold and we start getting an impulsive bounce from a higher low, then we can start to get a lot more bullish. But we won't have confirmation for many, many weeks. And that's why trading takes patience. On the NASDAQ 100 triple Qs, we were down 0.77% today, and the triple Qs are coming back down to retest the breakout at 370. And we're also sitting right on top of the rising 5 EMA. And as we are developing a bull trend, I also want you to be cautious that we do have gaps to fill to the downside that could take us low as the 350s. We have a gap at 363, 357, and 351. So even if we want to get bullish, eventually we're going to need a higher low into a higher high. And we can't just continue to go up in a straight line because that's just not sustainable. Now in the bearish scenario, this is just a lower high and it's going to be a bull trap false breakout, and we're just going to flush down towards that gap fill in the 330s. Again, nobody knows exactly which one's going to play out, but you need to be cautious because the market structure currently allows for a bear trend to continue lower. If we get a higher low, higher high breakout, that's completely different. So the downside critical support in the triple Qs will be in the low 360s, the mid 350s, and then around 351 and 350. If we break all of that support, that's extremely bearish and we likely go into the 330s. On the Dow Jones, we were down 0.59% today as we're pulling back from that downtrending resistance trend line in the 340s. And from here, we'll likely go down and fill the gap at 338 and 333. And if we get a higher low bounce and breakout, then we can start to get more bullish. Right now, this could still be a lower high rejection from a downtrending resistance trend line that could easily take us down towards this gap fill at 322. So like I've said many times, if you want to get bullish, we need more confirmation of a higher low first. On the Russell 2000 IWM ETF, we were down 1.55% today, and we flushed down, and price action is back down below all the moving averages, and we're very close to filling this gap around 165. If we continue lower and break through all of the support around 162 and 164, then we go for the next leg lower at 157. In order to get bullish, we need that higher low, higher high breakout, which is going to require a break and close above 175, and that will likely take us to at least 180. On the ARKK ETF, we were down 3.1% today, rejecting from the resistance zone that I told you was critical between 40.5 and 41.3. And from here, we likely come down and fill the gap at 38 and then a gap down here at 35. We continue lower, we go fill the gap below 32 and continue the bear trend. And in order to get bullish, we need a higher low into a higher high breakout, which is going to require a break above 41.3. On the VIX, we were up 5.82% today as the VIX is starting to bounce, but we need the VIX all the way above 20 to get the bear market scenario. So as the VIX is bouncing during the pullback, watch for resistance zones between 18 and 20. And if we start closing above 20, you need to start favoring the bearish scenario. On Bitcoin, we're currently up 2.5%, and Bitcoin did hit the next price target at 37,000. Started to get outside the upper Bollinger Band and started to pull back. So as I've said, this is a bull trend as long as we're above 32,000, so we could continue to push higher. So look for that next bull breakout on the break above 37,000, which is going to require a daily close, and currently it looks like we're starting to pull back. Support levels will be 35,000 and then 32,000. On Tesla stock, we were down 5.46% today, and I told you if we broke down below 214, we're looking for a gap fill right around 206, and we were just about 68 cents away from filling that gap today, so it's still likely we're going lower to fill that gap. If we continue lower after that, look for support at 197, and if we can't hold 197, we likely go down into the low 180s. On Apple stock, we were down 0.26% today, and I still think Apple is likely due for a higher low pullback at some point very soon to retest this breakout between 174 and 177, and the next resistance above 182 is going to be right there at 185. So jumping back over to the S&P 500, keep in mind we're starting to pull back from the danger zone, which was the expectation, and the only thing we're watching from here is how low are we going to go before we find support, and is it going to be a higher low, or was this a lower high before we continue into a bear trend? Told you many times the risk reward favors the sellers and the bears, and that's why we're starting to pull back. So as we pull back, we need to watch the price action very closely to see if we're going to get a higher low or if we're going to start impulsively selling lower and continuing a bear trend. Let the price action do all the talking and be prepared for any scenario. And as traders, we couldn't care less which scenario plays out. We simply want to be on the right side of the trade. If you put the risk and reward in your favor and stack all odds in the favor of the trend, you are going to win more than you lose, and you are going to remain profitable. We are absolutely crushing this market on Bank Trade Alerts and the Stocks Channel Discord server, so if you want to join either of those services, you can find out how to do so by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.